In this case study, we're going to be going through how my client was able to purchase a property that has increased over the last couple of years by more than 50% in capital value. In addition, it's had solid rental growth as well. When we purchased this property back in November 2023, just over 2 years ago now, we purchased it off market for $370,000. Nowadays, the property is valued at $560,000 as a desktop valuation, and it's rent appraised at just under $500 per week. So let's go through some of the leading indicators around why we selected this particular area and the decision leading up to it. When we looked at the data, we saw that the total number of property listings leading up to this date had declined from a previous high. You can see here that the total number of property listings overall for this area was around about the 500 in terms of total properties. And we hit a peak towards the end of COVID at 2022. And then you can see the number of property listings declining right up until when we purchased it there. If we were to zoom to see how this has transpired, you can see there that we've dropped from around about 400 property listings in this particular postcode when we purchased the property, all the way down to 200 property listings. So the number of property listings overall has halved in the last couple of years. If we look up the breakup between houses and units, units only represent a small minority of this area. And then if we remove them again, it doesn't make too much of a difference there, with the large number of property listings belonging to houses. Gross rental yield was around about the 6% mark for a 3-bedroom home. When we first purchased it, it was vacant, and we managed to negotiate early access so that we can do tenant inspections for the purpose of placing tenants prior to settlement, or at least finding tenants. Since then, you can see that the rental yield has dropped off because capital growth has been stronger than rental growth. So that when we purchased the property, it was yielding around about 6% there. And then because capital growth has been stronger than rental growth, it's outpaced rental growth. And now you're getting around about 4.8%. When we looked to purchase property had gone up in the area over the last year prior, from 2022 till end of 2023, we had seen that property prices had started to come up, and we were getting capital growth of around about 10% per annum. So you can see there that not much happened till about early 2022. And then towards the end of 2023, you can see there that property prices had come up. Since then, we can see property prices have come up from about 370. Now we're averaging around about 600 for a 3-bedroom house. In terms of the overall vacancy rate, you can see that over the long term, we had vacancy rates of around about 1.2%, with a 5-year period where we were in the 3s and 4s in terms of vacancy rate percentage. We had a bit of a blip at the beginning of COVID there at the beginning of 2020, where we were in the 2s in terms of vacancy rate. Overall, you can see that when we purchased the property, we were on a downward trend. And you can see there's a number of peaks there, December, January of every year, where the vacancy rate peaks. However, the vacancy rate by far and large was less than 1% the most part of 2023. If we have a look at how property has fared in terms of vacancy rate since, it hasn't really gone up above 1.2%, remaining consistently low in the area. Now we're looking at a vacancy rate of 1.1% at the moment, being the end of the year. In terms of overall weekly rental listings, towards the time that we purchased it, we were at a rough all-time low there, which was only really comparable with mid-2021. If we have a look at how the weekly rental listings are going, we're in a similar situation. Again, you can see these peaks at the December, January of every year. However, by far and large, there is largely very few rental listings on the market compared to between 7 and 15 years ago when we had a large number of rental listings on the market. And then you can see the breakup between houses and units. So between 90% and 95% is the number of houses versus units in terms of weekly rental listings. So overall, the vast majority of properties being rented on the market are houses in this particular area. So thank you everybody for watching. This is essentially how we look to purchase a property off market in this area and how it's grown over 50% in capital value and probably about 40% in rental value over the last 2 years. Thank you everybody for watching. If you have any questions, please don't hesitate to reach out. Otherwise, we'll speak to you soon.